Now we head to Zimbabwe, where the economy is projected to grow by 2.7% in 2016, despite its budget remaining flat at $4 billion. Now, Finance Minister Patrick Chinamasa said he expects revenues amounting to $3.85 billion, while the deficit will be financed through domestic borrowing. The Southern African country is already saddled with an $8.3 billion debt. It, however, plans to clear $1.8 billion of those arrears by June 2016. Delivering his budget speech in Harare today, Chinamasa said exports are expected to increase from $3.4 billion this year to $3.7 billion. The gold mining sector got a boost with a reduction in royalties from the current 7% to 3%. With this, production is expected to increase from the projected 18 tons for 2015 to at least 24 tons in the new year. Chinamasa said new rules for compliance with indigenization regulations would be announced before the end of the year. Zimbabwe is reviewing its investment laws to attract foreign direct investment.
Government has now realized that we need to support our miners during difficult times, and we're looking forward to the reduction in royalty, but we're also working out mechanisms to reduce the 12.8 cents kilowatt hour for their power, so that a combination of reduced royalty and power will actually spare our companies into the future.
I think in terms of policy trust, there has been a very deliberate move towards an indication to investors that Zimbabwe is ready for business, and we are not there yet, but we are making strides to ensure that we support private business.
Now let's delve further into what has been described as an almost impossible task for Finance Minister Chinamasa. Joining us from Zimbabwe to review today's budget decision is Farai Mwakutuya. Farai, great to have you on the show once again. Now, how are Zimbabweans receiving this $4 billion budget? Of course, in the face of falling revenues and, of course, the staggering $1.8 billion the country owes to multilateral creditors.
Well, I think you said it quite rightly there, a difficult task, near impossible. And I think the realization that the minister was caught between a very difficult situation, a rock and a hard place effectively. Many people here feel that this is the most realistic budget that he could have presented, given those very difficult circumstances. In terms of those arrears and their payment, many people here welcome that because they see this as perhaps the quickest way and most realistic way that Zimbabwe can be able to access international funding again, which it crucially needs at this time. Studio.
Now, Farai, he also projected revenue of about $3.85 billion, with recurrent expenditure still staying at 93% and capital expenditure at 6%. Now, what measures does he plan to take in order to find the funds that are so obviously needed by the country?
In recent months, we've seen the government here stepping up efforts to try and improve the investment climate, to try and improve the ease of doing business environment, and all that is in a bid to attract foreign direct investment. And so Patrick Chinamasa may be hoping that those efforts start to pay off and that FDI starts to trickle in. Zimbabwe also still accesses funds from international development partners, such as your UNs and your EUs, and they've already committed to funding projects in agriculture and infrastructure, for instance. But I think long-term, ultimately, the solution to Zimbabwe's challenges is the access to international capital markets from multilateral institutions, which is why the re-engagement with IMF, World Bank, for instance, are so crucial. Studio.
And as you mentioned, he talked about the IMF, the World Bank. Now, he talked about finding financial support from the World Bank, the IMF, and of course other development partners. How will this play out politically, where there seems to be a sort of split in the ruling party regarding receiving Western credit?
Well, we've certainly heard about that perceived division, the divisions, the difference of opinion. But whenever the finance minister speaks publicly, he says that he crucially has the support of his principal, and that's President Robert Mugabe. It's also unlikely that he would have made the progress that he's made, entered into the negotiations that he's gone into, and made some of the concessions that he has, if there was no commitment to see this entire process through. And so based on that, we think that it may happen, that this may go ahead, the engagement will continue.
Now, Farai, still in the region, let's take a look at Zambia. And its president came out today, President Lungu actually backtracked today from a warning he made earlier this month that the state would take over mines that have shared jobs. Now, what does this mean for the sector, the copper sector, the mining sector in Zambia, and of course, Zambia's economy?
Well, I think President Lungu's statements could be an acknowledgement that, some of these companies that are suspending their operations, that are cutting back production, the challenges that are facing the copper sector are beyond their control, and that they're perhaps here to stay. And so even if government wanted to take over these mines, it can't sustain operations at the current depressed prices. And so perhaps that is why we're seeing these indications. Now, in terms of the impact on the economy, you've already touched on it a bit earlier. It's been massive. If you look at what's happened to the kwacha, if you look at the economic projections, we understand that growth projections are already slowing down. It's going to be below 4%, and that could lead to austerity measures, some of which have already been announced. Foreign trips will be cut back for government officials. Plans to step up and continue with road projects, infrastructure projects have been suspended. That's something that this PF government has been doing ever since it came to power. It's been doing it very aggressively, but it's now pulling back, it's now suspending those contracts because of these challenges, and they're set to perhaps intensify going forward because this economy is so dependent, so heavily reliant on copper. More than 70% of its exports come from that, and so the impact will be massive.
Well, Farai, suddenly a tough time for those two economies there. Thanks so much for those insights. Of course, he's joining us from Harare, Zimbabwe.